What's going on, guys? Matty Ice here. Welcome back to another episode of Investing with Matty Ice, where I share my investing journey with you guys, specifically with income ETFs. And today, I want to talk about the difference between buying Bitcoin versus buying the Bitcoin Income ETF from NEOS, BTCI, which I am a huge fan of both of these assets. I've been buying Bitcoin for a long time. I recently just discovered BTCI at the time of this recording anyways, a couple of months ago. And I get really excited about both of them. I think they're both very powerful assets, but I think it's natural to ask this question as you start to do research on these different assets. Which one should I buy? Right? I think that's perfectly natural. However, there is an inherent problem within that question, which is why I wanted to make this video to address that. And the issue is it assumes that you should or can only buy one or the other, when in reality, we're probably going to benefit much more long-term if we buy both of them. Now, which one we start with, which one we allocate more of our funds to within our portfolio, those are separate questions that we'll actually start to get into in this video. However, I'm a big believer in buying both of them. Now, it's not specific financial advice. I'm just sharing my journey, like I said earlier. However, I wanted to address this question because I think it's really important. And to start, let's first address the pros and cons and break them down, the pros and cons of buying Bitcoin versus something like BTCI. Now, so the pros of buying Bitcoin, we'll start there. Obviously, when we buy Bitcoin, like spot Bitcoin, and we put it in cold storage, I don't ever really recommend keeping it on an exchange, at least for long periods of time. Definitely want to do cold storage. But when we do that, we are obviously getting the highest amount of potential upside to the price exposure to the price volatility of Bitcoin. And that's both to the upside and downside, obviously. But if you're a Bitcoin fan like me, you understand a little bit, you probably share the same amount of confidence that I do that Bitcoin is going to go up in value over the long run, despite any corrections along the way. All right. So to get the highest amount of upside potential on Bitcoin, well, it makes sense to buy the actual Bitcoin asset and then put that into cold storage, right? So that's a pro of buying Bitcoin. Whereas with something like BTCI, which we'll get to in a second, we're giving up some of that upside in exchange for the cash flow. All right. We'll break that down. All right. Also, another pro of buying Bitcoin, this is more on the philosophical side of it. I guess you could argue economic too, but it's the truest form of financial sovereignty, at least in my opinion. There just isn't, again, in my opinion, a better bear asset than something like Bitcoin, where we can memorize 12 words and take our wealth wherever we go. Like, there's just so much power in that. It can't be seized or anything like that unless we screw it up. So obviously there is a degree of responsibility and accountability with owning an asset like Bitcoin. But it really does give us the option for true financial sovereignty that you're just not going to get with any other type of derivative or different type of financial product associated with Bitcoin. Also, this is just really cool and just powerful, so powerful long term, and really is a major part of the Bitcoin story and in its true value. I think is we're acquiring the actual asset that is the true engineered solution for one of the longest standing problems of mankind's history, is the store of value. Like, how do we store our economic labor? How do we store our purchasing power and transport it into the future without it losing value, because governments are printing so much freaking money? And I learned this from an amazing talk that I heard from Bitcoin Prague. I wasn't there, but I watched a video about it, and it was one of the best talks on Bitcoin I've ever heard. I will link it down in the description for you guys below. I think it's like 15 or 20 minutes. It is amazing. And it's basically where this gentleman is basically talking about how Bitcoin is the hardest money ever created, because it's the engineered solution. Like, we actually created Bitcoin itself, versus like gold, for example, which is something that we discovered and just happened to start. It happened to have some of the properties of a really good store of value, some of the properties of really good money, but it's not perfect. It's not the ideal solution, the ideal engineered solution like Bitcoin is. Same thing with fire. So if we light a fire, it allows us to see at night, and it lights up the room, etc. But there's a lot of problems with that. So can it work temporarily? Does it have some of the properties of allowing us to see in the dark? Yes, but you have smoke, you have natural resources you need to tend to, you have to make sure the fire doesn't go out, etc. Smoke inhalation, all these problems. So then engineers came around and learn how to harness electricity. So now instead of having to build a fire to see at night, we can flip a switch, right? So electricity is the ideal engineered solution for the lighting problem for mankind, right? And so we don't really use fire anymore to see in the dark. Well, the same thing with Bitcoin being the engineered solution for the store value problem. We're talking about being the solution for where hundreds of trillions of dollars is trying to find a home to store value. We're talking hundreds of trillions of dollars in bonds and stock market investments and real estate, art, gold, different commodities. People are storing their purchasing power in these different assets because that's the best that we have right now. But now we have, up to this point, that is, and now we have Bitcoin, which is an engineered solution to the store of value problem. It cannot be printed. There will never be more than 21 million. And it's just code, right? But it was actually created. And because it was created, we can design it exactly how we need it in order to be the best form of money, the best store of value. And I just think there is just so much freaking power in that. I absolutely love it. You can tell it gets me a little fired up here, but that's part of what makes it such a powerful asset and an amazing pro of actually owning the asset itself, as opposed to a different financial derivative of it. And obviously the pro of buying Bitcoin too is this smokes inflation long term. I think it's currently at between a 40 to 50% compound annual growth rate. That'll probably start slowly come down over time, but it far exceeds the inflation rate, true inflation rate of roughly 6 to 8%, depending on M2 money supply and stuff. So it absolutely smokes inflation. So those are some of the pros of buying Bitcoin. Obviously, there's probably more to it, but just keeping this at a high level here. All right, now what are some of the cons of buying Bitcoin? Well, so actually, I want to be clear. Just kind of a side note here on this first con that I have listed for buying Bitcoin: extreme portfolio volatility. Me personally, I don't actually consider that a con. I consider that actually a benefit, assuming that you're going to buy Bitcoin and own it for the long run, and you're never going to sell it. Like me, I don't ever plan on selling any of my Bitcoin. Which is kind of one of the cons that we'll get to here in a second, where we have to either sell it or use debt to access the value. But I'm jumping ahead here. Let's stick with the extreme portfolio value. The reason I don't think that is actually a con is because it's volatile in the right direction. Yes, do we have ups and downs, and can the price correct 10% in 2 days or 1 day or more than that, right? Yes. What we have seen over time is that volatility start to come down as more adoption takes place, as the market cap grows, et cetera. What's happening is you have hundreds of trillions of dollars starting to interact with this brand new store of value asset. So of course there's going to be volatility, but it's volatile in the right direction. I don't think anybody can argue that Bitcoin is the best performing asset of all time. When you look at its growth rate over the last, 16 years, 17 years, whatever, right around there. I think it's 17 now. It's the best performing asset on the planet. So you could argue that, yeah, the price fluctuates quite a bit, but it's fluctuating over the long run in the right direction, which is up. It significantly increases our purchasing power versus having an asset that has no volatility, but loses purchasing power at 6 to 8% every single year, which is the US dollar. Right. So different way to start thinking about the volatility of Bitcoin. With that said, too, I understand, appreciate, and respect the fact that Bitcoin's price volatility might be a little bit too much for people's portfolio, at least to the extent that, the size of Bitcoin in my own portfolio. So I understand that, but that's why I mark this as somewhat of a con, because not everybody sees Bitcoin the way that I do, and it is extremely volatile. But you're going to see how that's actually a benefit here in a minute once we get to BTCI. But extreme portfolio volatility with Bitcoin. So you have to, I think that does have to be addressed. All right. The other con is that there's no cash flow. Right now, I've heard people like Jack Mallers say, which I'm a huge fan of, highly recommend you subscribe to his channel and follow his stuff. He argues that, there's cash flow when you sell it, obviously, and, it's appreciated and stuff. But I would argue against that. Because I don't ever want to sell my Bitcoin. And if I don't have to take on debt in order to access the value of something, I think there is some benefit in that. So one of the cons is that it doesn't produce any actual cash flow. You have to either sell it or borrow against it to then acquire an income producing asset. There's absolutely nothing wrong with that. The wealthy do that all the time, using debt to purchase additional assets, that is. All right. So again, is it a con? Not really for me, but I could see where these things could be potential issues for people. So that's why I'm bringing them up. Also, here's what I think one of the biggest cons of Bitcoin, of buying pure Bitcoin, is you're limited to your own personal income in order to purchase it. Okay, meaning you're only able to buy as much as you're able to afford to put into it, and that's a good start, obviously. But what if there was a way where, like, an asset that we could purchase that creates and generates cash flow that we could then use to purchase more Bitcoin? Would that not accelerate how much Bitcoin we're actually able to purchase? Absolutely. We'll get to that in a minute. Kind of jumping ahead a little bit here. I apologize, but this it's a perfect segue into BTCI and how combining these two assets is so freaking powerful. But think about that, guys. Like, you're only limited to how much discretionary income, like after all your expenses are paid every single month, whatever you have left over, that's really the only thing that you can use to purchase more Bitcoin. And while it's absolutely better than doing nothing, if you're not able to put enough money into Bitcoin, I would argue you're still going to benefit over the long run. But let's say Bitcoin 10x's from here over the next 10 years, but you were only able to put a couple $1,000s into it. Well, at the end of 10 years, you only have, $15,000 to $20,000. Fantastic return on your money, but you still don't have a lot of money, right? $20,000 in 10 years is not really going to do much for you. See what I'm saying? So we need to be able to put more money into these assets. How do we do that? Well, we can start to use other assets that produce cash flow to then take that cash flow and purchase more assets. Hopefully that makes sense. That brings me to the pros of buying BTCI and why doing both of these is so freaking powerful, in my opinion. It produces a BTCI. It's a Bitcoin Income ETF from Neos. All right, I did an entire video breaking down exactly what BTCI is. I will link that in the description, or if you guys want me to send it to you, just drop a comment down below requesting it. All right, BTCI, fantastic way to generate cash flow while getting exposure to Bitcoin, right? So it produces immediate cash flow. As soon as we buy BTCI, it makes monthly distributions. So those distributions are going to come in every single month. The yield is going to fluctuate a little bit, but the yield is fantastic right now. We'll get to that in a second. So we're acquiring an income producing asset that produces cash flow right now. This BTCI actually reduces portfolio volatility. It doesn't like when you own BTCI, we still have exposure to the Bitcoin price. So the price of the value of BTCI itself will fluctuate. However, because you have that consistent cash flow coming in, that's reducing your your cost basis, because we're taking those distributions and reinvesting them to purchase more shares of BTCI. So we get that long-term compound effect. All right. That is going to reduce the overall portfolio, the volatility of your portfolio, because let's say the Bitcoin price starts to correct, BTCI starts to correct as well. Having the cash flow come in is a really nice buffer to that portfolio volatility, right? So that's to me, an amazing pro of an advantage of buying something like BTCI. All right, we can reinvest distributions to compound wealth. I just alluded to that. And the current yield is it smokes inflation right now. I think it's currently a little over 27%. That's crazy. And I think that could be sustainable, between that 25 to 30% yield range over the next at least 5 to 10 years, because it's all based on Bitcoin volatility. Again, watch my video on how BTCI works. All right. But now what we're doing is we're able to use a portion of the distributions to either or both reinvest into BTCI to purchase more shares. So we're starting to compound wealth, because the additional shares that cash flow purchases, it's going to increase our cash flow the next month for our next distributions, because now we own more shares, right? And that's just going to continue to compound over time. But however, here's the thing is, what if we took a portion of those of that 27% yield? Maybe we took half of that and we take that in cash. We put half of it back into BTCI to continue our cash flow increase and compounding. All right. But then we take half of that and purchase Bitcoin. All right. So now we're utilizing not just our personal income to acquire assets. Now we have an asset that's producing cash flow that we can use to acquire more of the asset as well. This is where we can really start to accelerate the wealth building process in our lives, guys, by utilizing cash flow from the assets that we start to acquire. That's why cash flow is so important. And I think it's one of the greatest benefits of BTCI. You still have exposure to the Bitcoin price. We don't own Bitcoin. We'll get to the cons in a second here. but we can start to utilize that cash flow to build even more wealth. It's so powerful. Also, guys, the BTCI is incredibly tax efficient. Actually, all of the income ETFs over at Neos are extremely tax efficient because of the covered call strategy that they implement. I'll have separate videos maybe on tax efficiency and stuff, but you can go to the Neos website and learn more about like return of capital and all that, and why it's just so tax efficient, right? So definitely look that up. This is not a video on the tax efficiency, but that is one of the really good pros of BTCI. Now, what are the cons of BTCI? Well, I alluded to this earlier, mentioned it. We are sacrificing some of the upside potential that we would get by just earning or owning Bitcoin. So for example, if Bitcoin goes up 100% over the next 12 months, BTCI is probably not going to go up 100%, maybe goes up 50%. I don't know. It's tough to say exactly or to tell exactly what that correlation would be. However, the total return is still very good because you're continuing to get that cash flow, which contributes to your total return. But your total return of BTCI would probably not increase 100% over time. So it's give and take, guys. And me personally, I am willing to give up and sacrifice some of the upside potential, some of the upside price appreciation for consistent cash flow right now that I could use to acquire more of my assets. I think that is a small price to pay. The little bit of upside that you are giving up is a small price to pay to start to build this wealth building. Well, I said wealth ending. I can't believe I just did that. What a mess up there. It's good stuff. Whatever. We really start to build this, create this wealth building machine that starts to feed itself, right? So I'm willing to give up a little bit of that upside. All right. But that is a con. Okay. So it's important to know. Here's the other con. You don't own actual Bitcoin. There's nothing to self-custody. You own shares in your brokerage accounts. I use Fidelity, whatever, but you don't own the actual Bitcoin asset. Neither does the ETF itself, BTCI. They don't own any actual Bitcoin. Legally, they're not allowed to do it. And legally, they are only allowed to have, I believe it's currently up to 25% Bitcoin price exposure in the ETF. Everything else needs to be done synthetically. That's a separate video. All right. But you don't own any actual Bitcoin when you are purchasing BTCI. So that is an important note as well. Okay, this is also a newer financial product. It's not even a year and a half old as I record this. So could there, it's kind of like when Bitcoin came out, we didn't really know what it is or what it was going to do, whatnot. There's a lot of uncertainty. Somewhat of a similar argument can be made around BTCI, although I don't think it is the same conversation or the same potential issues, because this is basically a financial product that's already within the existing financial system. There's a lot of regulation around it. So I don't foresee any major issues with it. I don't think it's going anywhere. I think the yield will continue to be pretty consistent because I think the volatility of Bitcoin will be very consistent, which is what creates the yield, that high yield that BTCI provides. But I guess that kind of brings us to the next con is legislative risk. It's already capped at, upwards of only having 25% exposure to the Bitcoin price. If it was allowed to have more, could it maybe generate more yield? Potentially. Also the tax treatment as well could be a little bit better. So, newer financial product kind of finding its way, but when you actually research it, it's really not a super complicated financial product. There's no reason for it to go anywhere, but yeah, those are just some of the cons that need to be aware of. You don't have to deal with I should say this, you don't have to deal with the same amount or type of legislative risk having BTCI than you would owning Bitcoin, because Bitcoin, it's hard code. You're not going to change the 21 million limit. All right. And how the major functions of Bitcoin versus, the SEC could come in and just completely wipe out all of the Neos funds. Very, very unlikely, but you see what I'm saying, hopefully. All right. So those are the pros and cons of buying Bitcoin, buying BTCI. Question is, which one should we buy? You guys should know by now. Hopefully you figured it out. We should probably be buying both. Now you need to figure out what's best for you based on your risk tolerance and what you're trying to accomplish. But I think there is a lot of benefit to having both of these in our portfolio. So here's my philosophy around this. This is not an either or scenario. It's which one do I start with? How much of my portfolio do I allocate to each at some point? And then how do I use, for example, the cash flow from BTCI to compound my wealth, but then also maybe acquire more Bitcoin on the flip side as well. All right. So essentially what we have here are two different assets that provide different benefits, and you have to figure out which of those benefits make most sense for you right now in your investing journey, and then make decisions accordingly. But like I said, combined, I think they make a very powerful team, and we can use the cash flow from BTCI to do a lot of really cool things. All right. So here's what I would do if I was starting over and wasn't in the position that I'm in now, and I was just learning about these two different assets. I was starting over. Here's what I would do. I would definitely buy some Bitcoin. I think there's a lot of risk in not owning any Bitcoin at all. But see, that just comes from my understanding of Bitcoin, my belief in Bitcoin, and what I think it's going to do over the long run, and what it represents in our society now. I just think it is the hardest form of money that we've ever experienced as a species, and there'll never be more than 21 million. If you understand just the basics of supply and demand, that means likely means a very significant increase in purchasing power over the long run. So I would start with buying some Bitcoin, just have somewhat, just a little bit of a stack, right? And you're contributing to that every month, dollar cost averaging, et cetera. The other thing I would do, make sure you guys, well, this is definitely not going to apply to everybody, but I would get a Bitcoin rewards credit card. I have mine through Gemini. I think Coinbase has one now as well. There's probably a few out there. All right. But now I want to stress this. Do not get a credit card if you're really bad with money. If you spend more than you earn and you're not good with credit cards and debt and all that, then don't do this. Okay. It's just stupid to rack up tons of credit card debt, paying 25, 30% interest so you can earn Bitcoin rewards. That makes absolutely no sense. All right. So don't do that. But if you're responsible with money, you're going to pay off the credit card every single month. Basically what I do, I put most of my expenses on my Gemini Bitcoin rewards card. I pay that off every month. So I pay 0 interest, but I'm earning Bitcoin rewards on things that I buy every single month anyways. That just makes sense. And that's a little bit of extra Bitcoin that you get every single month. I think there's a lot of benefit to that. I would then open a brokerage account at Fidelity. I would start dollar cost averaging into BTCI and use maybe half of the distributions to reinvest back into BTCI to get that compound effect, increase cash flow every single month. And then I would take the other half and purchase more Bitcoin, put that into cold storage. There you go. That is a very simple way. Like, I don't think that's too complicated, right? I think most would agree. It's a pretty simple way to use both of these assets and build our wealth over the long run. But I would love to hear your feedback, guys, and what you think about this. Do you have a preference of buying Bitcoin over BTCI or vice versa? Which one would you start with? How would you allocate in your particular portfolio to these different assets? I would love to hear your thoughts. All right, so drop those down in the comment section below. Make sure you join my free income income ETF investing Facebook group. I'll link that down below too. Sorry guys, I can't talk today for some reason. But anyways, I hope you guys are crushing it. I hope this was helpful. Drop your feedback down below and I will talk to you in the next one. To your success. Matty Ice is out.